Happy Memorial Day to everyone. 9:11 a.m. Pacific Standard Time, date 5/28/2012. What we are gathered here to do is take a look at this monthly chart because it's very clear. And we had the calendar year rally into 2012 peaks and the reversals that we have called for, and we're testing the 20-month moving average is going to be at 1289.64 in the public model. The 10-month moving average is 1291.04 in the public model, and those are monthly moving averages that the public will look at and make decisions on. Now, MMTs, one of the things we're going to talk about on the daily S&P 500 is that we're going to take the daily chart in the MMT platform, and we're going to go right up here when we were at 1405 and we were putting the top in, where I said that we were going to have the bigger reversal and that this was the counter rally that failed. Now we're down here at the bottom where we had a low of 1291.98, and we had that 2-day performance rally for the long side up to 1328.49. Then we had the volatility day. We come back down here and we tested it. Now remember, for Monday, each one, or for Tuesday, tomorrow, each one of these teeny value lines are based on a half a delta at $6.82 per line. Period. You can see how accurate they are. And they're called half deltas in our system. So basically, they have the consolidation, as they do. And they put this bottom in. They tested this half bar at 1306, and the body of this daily bar, the half bar here, was 1308. So you tested it, and now they're consolidating it right here from this original low. And the key support starting tomorrow is 1306. Shorter term, June 21st is when rallies start in the summer. They have different time periods, and we're going to work with the time period that the markets have sold off. However, if we build the base that we would rally back up into January, or not January, but June 21, as the rally from the January breakout of 2012 is what I'm referring to. And we would rally up in anticipation of a summer rally in advance. And the only reason why we're saying that that is case A, the bull, is because of this daily consolidation without closing below this. It's always the up bar. This is your first half bar resistance. This bar over here is 1302.11. And this is your lower support levels. Support level 1, 1306.06, is the half daily bar, and support number 2 is 1302.11, because if we drop down in the base and we bounce and we bottom up like in that wick, then that means they're consolidating a shorter term bottom. Yes, this is the reversal that we called for. I have before me MMT, the VIX. That's called the fear indicator. And we got down to levels where, we got down to levels that were so complacent. You can see the breakout in that fear right up to 24.75. That's been the biggest breakout all calendar year. But you can also see that it's reversed from that fear as we were going down in the VIX. And you can see how the bottom here of the upper chart, that's this one, you can see that you have the reversal in the fear mathematically. And it's still elevated up here at the highs, but it has a reversal as the S&P 500 is putting the bottom in right now. So starting on Tuesday morning, as long as this daily movement here continues to go down, this is going to have more of a solid base, and a breakout side would follow. And broader equities would follow the same price movement, because the futures market, they would buy to cover in the exchange model in the futures and stock futures, and they would start short covering. That's buy to cover. When they buy to cover, this fear will go down and this S&P will go higher, and equities will follow the same suit. Now, once again, MMT, look at here of the reversal part. and I want you to see where you were up here at the high. That's the S&P going straight down. And then right here in the same video, right where my pointer is, you can see the breakout in that fear indicator, MMT. And this is the time when the put side really works and the call side loses value in the option pit. And when we broke out, this is the biggest calendar year breakout of 2012 right now. And what we're going to be taking a look at is how that S&P sold off and how we're going to try to put this bottom in. And what would be the contrarian view of the S&P is that you would rally up based on the exchange model, buy to cover short interest, consolidation, higher high breakouts, they pull back, they hold their base, and they continue to move higher. So when the summer period does come, everybody would be anticipating a rally, but the rally had already occurred, and it's very likely that this is a bull case that we're talking about, case A, bull only. And to verify that, the ascending breakout and the mathematical system that we have here, that what the diamond alerts is that there's a lot of diamonds here. You see, the thing about it is each one of these diamond areas at these delta lines, here's 1350 on the S&P, or slightly right below it. But they're going to have challenges as they come up and hit the lower diamond here, the lower diamond here, and the lower diamond. This is that ascending value. So 1, 2, 3, 4, 5. 5 straight down days, and you can see how the diamonds made the lower lows. And then the reversal, then the consolidation, narrow daily range. As the 10-day will flatten out, they drop down in the handle. If they hold support on the S&P, the broader equities, the higher beta equities will drop to support levels. They too will bounce. So we do have a short-term bottom in. We have a summer seasonality that starts in June 21st of 2012. What will the market do is that it will be decided by the MMTs what the mathematical equations say. So if we're consolidating before a big breakout happens in case A, you're going to want to be identifying this reversal and the last 5 down days relative. You got 1, 2, 3, 4, 5, but they're narrow range. It's still a bottom. And the fear indicator peaked up here, and the high of that fear indicator was 2514 in the VIX, which is the S&P. Now granted that they're manipulated and they don't really mean the same to the public as they once did, but mathematically they mean a lot to us. And the reason why I say that, because when I show you back over here at 45 in the chart, that was back last year. And we called all of that, and we have all the live videos and everything. This is where the complacency started, right here. And as I said, over here at this bottom, you had your breakouts, and you had your bull top reversal, and then we really broke out, though, from this part of that test. And when you go back and look at the S&P 500 daily chart, MMT, you'll see exactly what I'm talking about, because at that time we were putting the highs in over here when this was happening down here. You can see how the highs were put in as the fear indicator was very complacent mathematically. There was going to be a turn in the marketplace, and we were short all of those things. And you can see here that in the S&P, you can see where these tops were reversing from the volatility. You got up here, you pull back. We were involved in these 1, 2, 3, 4, 5 days. We came back and rallied up off the bottom. We held that bottom, and we came up and we tested that diamond, and we have never looked back until now again. And that's been the range. And you can see over here where the complacency was in the fear indicator. No fear. But now just remember one thing. When they're both mathematically imbalanced, turns will happen in the market. Right now, the fear is reversing. So starting Tuesday morning, we'll see where support levels hold. If support levels hold, then that means that the upside of resistances to these diamonds over here, let's say we get up here to 13, let's just call it right here, 1347. Okay, and what I will end up doing is I will go in and do the math, and I'll let you know where those delta lines are. A 2.5 delta movement in our system puts the S&P, if there was a rally, that would take you up to 2.5 delta at 1354 on the S&P. 1.5 delta so far is 1341 on the S&P, and we're at 1317. That's 1.5 delta. One full delta at resistance is going to be 1334 on the S&P, and that also is in line with these diamond resistance levels, that if we do break higher into resistance, there would have to be some back end filling. Not only that, MMT, check this out. A half delta movement, a 1.5 delta movement, MMT is 1327 on a half delta movement now for Tuesday morning opening bell, and that puts that thing slightly right in here. And so listen, there's going to be a lot of movement, and the movements, I just read them to you. Now if we go down, 1.5 delta negative on the S&P is 1300 in our system. One full delta down for tomorrow is going to be 1307 MMT, and you can see 1307 would be right down in here where this lower diamond is, slightly above it, right in this range where the bottom was, half bars and whatnot. So if we were to sell off, we could sell down to 2.5 deltas the same way. That's going to be 1286 for tomorrow on the S&P. If we were to continue a Tuesday sell down and go down in the negative delta range, this would break higher. If we go the other way, then this fear is going to come down, and we rally on up to test these upper end of these resistance levels that I just discussed here in MMT starting Tuesday morning on the S&P 500. We got the numbers. They're on the live video. Just remember, though, that we have to clear those positive delta movements that would go higher. We have to be able to go through those resistance channels.